Everybody. Welcome back. Just want to do a quick video on leveraged ETFs and how they can be used as a tool for those of you who maybe don't want to quite risk as much as something like with options, or you're not comfortable buying or selling options. You're not comfortable with doing futures, but you want to trade a little bit more aggressively. You want to trade stocks a little bit more aggressively, and come up with oversized gains and outperform the market. So there's a way to do that without options. Okay, and that's through leveraged ETFs. So what is a leveraged ETF? So a leveraged ETF is it's essentially a stock. It's an ETF where they track to perform a certain amount relative to the underlying stock. Okay, so let me dumb that down for you. So SPY is SPY. It's the S&P 500, and it's very generic though in terms of how ETFs go. Okay, so SPY was up. What does it look like? SPY is up barely anything today. It's up what 0.15%? Is that right? A lot of action for nothing. Just confirm that's right. Yeah, I guess it's up a little bit more after hours now. So I'll put it to you. I'll break it down for you this way. Okay. So here we had a move here on August 5th. We were at about the 508 range. Okay. So SPY touched that 508 range. All right. And then it came back up. Okay. Now, so 508 to where it's at now at 544. Let me just do a little math. 544 minus 508. So SPY is up about 36 points. Okay. That's about 6%, give or take, a little over 5%, I think, because 25 would be 5, 36. That's actually probably close to 7%, okay? So SPY is up about 7% or so in this time frame, okay? Now, 6-7% in a week is really good, right, in itself. Okay, but what else could you do to exacerbate those gains? I guess. Well, instead of buying SPY and getting this 7% return here, you could buy a stock called, or it's an ETF called SPXXL, and it's the Direction Daily S&P 500 bullish 3 times shares. So what does 3 times shares mean? Okay, it means that this ETF aims to provide 3 times the return that SPY would, and it's usually on a daily rate. So if SPY goes up about what is 7%, it was, right, from here to here, right? So this would look for something like 21%, or that 20%, 20 to 25% range returns just from buying this stock instead of SPY. But it's the same. It's the same jump, right? So you're going from 115 to 142. So yeah, about 25% gains there. Okay. Another thing, if you wanted to short SPY, so let's go back here. So here's the SPXL. Let's go back to our SPY page here, right? So here we got a sell signal here. We had this nice big run up. Everything was great. And then boom, we get our sell signal, right? Well, if you don't play options, then all you would do here is you would sell your position. What you could do instead is, if you felt that this drop was going to continue off more, which it did, you could then buy a stock called SPXS. Okay, so remember the other one was SPXL. This one is SPXS. Get it? The L stands for long, bullish. The S stands for short. So it's SPXSX. And it's a 3-time bearish inverse ETF. So what does that mean? So when SPY goes down, so let's go back to SPY. So when SPY goes down, it's going to outperform that, or it's going to attempt to outperform that 3 times. So what does that mean? So let's look at this drop here. So here we were at about 555 here, where we got our first sell signal down to the drop here. Okay, so 555 to about 508. Again, I'm not the best in math here, but that's about 47 or 8 points, something like that. So SPY had about a 10% or so drop here, right? Yeah, I think so. About 10%, a little bit less. So what would you do in this? Normally in this situation, you would just sell and kind of sit around, right? And wait for the next buy signal, right? If you're not trading options and buying puts here, which played out well. But what you could do instead, if you don't trade options, is you could buy that stock that I just told you, that SPXS. Okay, and now let's look at the same drop from so July 23rd to August 5th. So July 23rd to August 5th. Let's see how SPXS performed from July 23rd to August 6th. Is that what I said? I forgot the dates already. I apologize. Let me just go confirm those. So we do this the right way. Okay, so sorry, here it is. Tuesday, July 23rd to August 5th. So July 23rd to August 5th. SPXS. Okay, July 23rd. Here it is. Okay. So July 23rd to August 5th. Okay. So here you were able to get in on July 23rd at about 7:45, and then you rode that all the way up to 960. And I don't know what those gains are, but it's more than 10%. Okay. It's probably about 3 times that. It's probably closer to 30%. That's what these leveraged ETFs are, and I'll come out with some more information about this, because it's not just SPY, okay? So they have, remember I told you about the NV or the XPS L and S. Well, NVIDIA, which is ticker NVDA, also has NVDL, which is a 2 times long. They also have NVDS, which is a 1.5. NVIDIA also has a triple. Uh, they have a bunch. Tesla, same thing. Tesla has TSL Q. Okay, that is a 2 times short ETF. So if Tesla drops 10%, then this ETF will go up 20%. See how that works? Here's TSLQ. Okay, so this is 3 times short. So if Tesla went down 5%, this ETF would go up 15%. Okay, so this is how you can use leveraged ETFs to your advantage, even if you're not trading options, to outperform the market. So they have this for Apple, they have this for Microsoft, I'm sure, Tesla. They have it for the Mag 7. So um, if you're not trading options, use this as a tool to trade. It's going to take your trading to the next level. So and that's leveraged ETFs in a nutshell. The one thing about leveraged ETFs I'm going to share here, by the way, before I give you this pointer that I really want you guys to know, like and subscribe to the video, to the content, the channel. So the thing about leveraged ETFs is that you don't want to hold these long term. Okay, they're not meant to hold long term. You can hold these short term, maybe a few days, weeks, months, but I would not hold these long term in your portfolio due to decay. So. It's nothing like options, don't get me wrong, but there is still decay with the leveraged ETFs. So, anyways, that's leveraged ETFs in a nutshell. You can do this with day trading too. The thing about the leveraged ETFs is it'll require a little bit more capital, and so it works the other way. Remember, I said with SPXL, that's going to go up 3 times. So if SPY goes up 1%, SPXL is going up 3%, about in that range, okay? But it also works the downside. So let's say you're wrong and SPY goes down. So if SPY goes down 1%, guess what? You're going to be down 3%. So it works both ways, okay? But you can use this as a day trading tool if you're getting demolished on options. You find that options are just a little bit too volatile for you. A bad day trading a SPSX, SPXS or L, a 3-time leverage SPY. A really bad day would be like a really, really, really bad day would be you'd be down 10 or 15% on your position. On options, that same day, you would be down 100%, or close to it. So, anyways, that's all I got. Those are leveraged ETFs. And if you guys have questions on this stuff, let me know. I'm pretty well versed in all this. But there's always a way that you can use these tools to to get better ahead. Again, these are perfect for people who aren't comfortable with options or don't want to play options, or maybe they have a lot of capital, they don't want to tie that up into options, but they kind of have a really good feeling that the market's going in one direction. Well, instead of picking up those 10% gains on a correction like this last correction with SPY, I mean, I'll just pull it up right now, right? So if we go to the SPY daily chart, ignore the, I'll just do this to make it easy. I already have it saved. So when I pull up the SPY daily chart, and you see, um, uh, what was my point? Where was I going with this? Oh, the last correction. So this last correction here, when SPY went down 10% from here to here, if you bought, again, if you bought SPXS, you would then be up 30% from here to here. Granted, you're not up 30% anymore. You're probably up 15% or something like that. But so that's a really good way to use that, as a tool. So, anyways, that's all I got. Appreciate you guys watching, and I'll catch you in the next one.